Too well by now. I'm not just going to talk up real estate and pitch it to you as if it's this perfect investment or this perfect business model. There's a lot of stuff wrong with it too. You've just got to be able to overcome it and got to have the appetite for it. So I'll spend a little bit of time talking about the bad, and I'm not going to spend a lot of time talking about the bad because I love investing in real estate. It is my preferred vehicle of moving my money and making my money as well. But we got to keep it real. If you can't handle the pain in the ass factor of this, which there's a lot of it, stick to your 401k. Just stick money in something truly passive, stocks, REITs, whatever it is. Because these are I'd say the biggest highlights of why real estate investing could be a struggle. The first thing is acquisition struggles. And the best way to put this is it's hard to get a deal. It's hard to get a deal. You might have money and not be able to place it because you can't find something that meets your criteria. Take a look at, here's a particular county. Here's a pro tip for you guys. I really like, once we can get this out of here, I really like Porter County, Indiana for B-class multifamily. It's 2 counties away from Chicago, basically. Here's Chicago right here. I like Lake County too for C-plus assets. But for B-class, I love Porter County right here. And here's what's for sale as far as multifamily goes on the open market. They're mostly little duplexes that are targeted towards homeowners. You got a couple multi-unit buildings, and they're either overpriced or in shitty condition, or overpriced and in shitty condition. The options aren't great in any decent property. Take a look, 274, 266. Yeah, there's something wrong with these properties. Weird buildings with commercial units, right? $300,000 for a duplex that's gonna rent for, I don't know, $1,200 per side, $1,150 per side, something like that. This is a crazy market. And if you're trying to get property at a pretty fast pace, or you're just trying to get good property that's profitable at some discount from market value, or a really stable property, your options are slim. A lot of acquisition struggles these days. You know what, in a lower market, it was hard too, just the prices were lower, so it felt like it made a little more sense. And it was easier to find a lucky deal. So yeah, acquisitions is tough. The next big pain is the bank. I'd say our biggest bottleneck to buying a lot more real estate is the bank. And we're not even debt happy, and we have money to spend. And there's a lot of investors that are limited by money, and the banks are even more of a hang up for them. And I'll give you an example. I mean, here's this email that we looked at from this bank I've already got a relationship with. And I just want to cash out 2 properties that I own free and clear, 13 units total. They're worth, I don't know, $800,000, $900,000. And I approached them about this 2 or 3 months ago, and they said, well, slow down, we just gave you a loan. They gave me a loan for like $180K or something like that on a 4-plex that was worth like $500. That pretty big one with the 1,800 square foot units that we talked about, the 8,000 square footer. Yeah, that was the last loan they just gave me. They're already telling me to slow down. I could literally pay off all the debt I have this bank and every other bank on my portfolio in cash if needed. Income strong, and they're still telling me, yeah, you know what, we don't really want to do this. Check in with us in a couple months. Check in a couple months. What do you know? The rates have gone up. They only want to give me 65% loan to value, which I'm fine with. And they're not doing 25-year loans anymore for me. Now they're doing 20 years. I guess they want to adjust their risk against me, right? And they want me to make some repairs to the property first, which I'm fine with. So banks they're a headache. They usually want to go slower than you, or if you do go fast with them, at some point they're going to say, all right, you've done $1 million in debt. Now we need you to wait a whole year so we can see how these properties perform before you come back and get some more debt with us. We want to see how these, your portfolio is doing. So definitely the reason my portfolio isn't bigger than it is, it's financing, right? It does get tricky. Creative financing, the folks that don't care about slowing down, just want to give you money eagerly, really expensive. High rates, lots of points up front, basically fees to write the loan for you, upfront costs. It's a hassle. Banking is a hassle. But they give you 80% of the property's value, but the properties are expensive, so a lot of investors need financing just to buy them, and the competition is all using financing. So the market's high based on banks giving out loans, but the more experienced investor could have some hard times adding debt as fast as they want. The next bit's property managers. This is self-explanatory. Look, you're hiring someone else to manage your asset and essentially manage your money, right? So now you're in this business where you have an employee, but you're not even like making a ton of money, right? Owning a rental property or 2 or 3 or 4 doesn't make you filthy rich or put a bunch of money in your pocket overnight. Over a lot of time, it does make you rather wealthy, but up front, you are managing a business and you become an employer essentially, 1099, for very little result. and you just have to be able to build a system and get efficient, build a relationship with your manager. Here's an example. You guys remember this quote from this property management company. They weren't looking out for me. I had to look at this quote and say, wait a second, let me dissect this. Let me critically think. Let me save myself some money. Let me request a different outcome. Or at least ask that they get another contractor out there to get me a better price. And they weren't able to find one maybe. So I might have to go and find a contractor and get them to coordinate with them and pay them an additional fee to deal with them, whatever it might be. We're always following up with our managers. We're always checking in on the tenant that is a little bit late to pay. We're always checking in on the vacant unit that has been vacant for a week or two longer than we'd like, or that rehab job we paid for but hasn't started in the past 2 weeks because management companies are busy and there's a labor shortage right now in 2022. So dealing with someone else managing your property that isn't technically even under your control, they just have an agreement to perform a service for you. Yeah, it's tricky. And some of them are really bad too. Like the good ones require a lot of engagement. The bad ones just fail and they could lose you money, and you've got to be good at finding the right management company. So that's a big pain, and it's a pain worth going through. Don't self-manage just so you don't have to like confront this risk of delegation, because when you encounter that, it's better to have that suffering when you're small and don't have a lot of money to lose, as long as you risk adjust for it and rip the cord out early if they're not doing well. The tuition is worth it, and then you'll learn how to manage your manager well by the time you're bigger, right? So you won't be losing money at large scale. Illiquidity is another big drawback to investing in real estate. And look, you don't necessarily need the cash because debt is available on rental property at a pretty high rate, but I've got these properties, they're worth $450, $500. If I want to make $500,000, put it back in my account real quick, I can't just go online like I do in my brokerage account and just click sell and put some cash in my pocket. I've got to go to the market with these. Maybe I've got to clean up some of the units a little bit to make it more marketable. I have to coordinate meetings with tenants to deal with a broker. Find a good broker to be able to sell this thing, or sell it off market to my buyers list, which I spent years and hundreds of thousands of dollars of advertising developing, so you don't have access to that, right? And I sure didn't 4 years ago if I wanted to sell a property like this. The other option to selling it is going and getting a loan on the property to get some cash back out, right? If you have enough equity to get the loan. So you have to have enough equity to get the loan. Then you got to deal with finicky bank to give you some money, and it still takes 60, 75 days to get a commercial lender to put something through during busy times like this. So getting money out of your rental properties or turning your assets into money, actual cash, not easy. Rental properties are illiquid. And the last big drawback is this shit is so niche-y. It's so esoteric. It's not out in the open. I'll give you an example. Right? You can't just like hop on Google and say, best markets, best secondary markets for small multifamily. All right. Oh, what do you know? First article, 10 smaller markets that are ripe for multifamily acquisitions. It's only a year old. This might be relevant, right? Let's click it. What are these smaller markets that it's telling you to go to find good deals? Oh, Raleigh, North Carolina, Austin, Texas, Charlotte, Salt Lake City, Phoenix, Atlanta, Dallas, Orlando, Nashville, and Tampa. These are the 10 most overpriced markets in the country. The 10 most overpriced rental property markets in the country. They're extremely hot, very hard to get good deals in. So yeah, enjoy your search for information about small-time landlording, right, or consumer-level real estate investments, which is what I do too, right? We're corporate, but we're still buying houses and duplexes and fourplexes and eightplexes. We're not buying $10 million buildings, right? We're playing a different game. So the only way to learn, it seems, about real estate investing at this level and a lot of like the intricacies of doing it well and not just reading like the first book you see on Amazon is, picking up a course like this, following some weird pages like mine and trying to stick it through those long videos, or going out and doing it yourself, right? Because even my videos won't tell you about your path. They'll give you a starting point. It's kind of like an on-ramp to your investing career, but you're kind of forced to go in and learn yourself and then pick up tiny details from people along the way, and you have to kind of put it together on your own. The information I learned from commercial lenders, how financing for these rental properties works, it's not Googleable. It's stuff I had to have conversations with commercial lenders about dozens, if not hundreds of times to understand along the way. So this is a really, really niche business. And the funny thing is that it's niche in all of these factors too. Understanding the liquidity of rental properties and dealing with banks and figuring out property managers and how to find good deals. These are very hard things to get from the internet, from Wikipedia, right? So you have to be willing to overcome this stuff. You have to be willing to hustle. You have to put the effort into learning this game well and being a good real estate investor, which is why I tell people, if you want to get into investing in rental property, it is worth it if you're going to grow. But if you're going to stay small, you're not going to have enough time and effort to justify learning all this over a little portfolio. You need the big portfolio, or at least the ambition to get to a big portfolio, to substantiate putting in the effort it takes to learn a very unique business.